So it's 11 September, the editorial of Indian Express. The first one is ease of paying tax. GST Council adjusts rates on some items, but larger issues of rate rationalization and compensation still need to be addressed. In its 54th meeting, the GST Council adjusted the tax rate on several items. It lowered the rate on cancer drugs, uh, trastuzumab deruxtecan, osimertinib, and durvalumab from 12% to 5%, and also brought down the tax levied on extruded or expanded products from 18% to 12%. Alongside, it granted exemption on research and development funds received by the state or central universities or institutions with income tax exemption. As per reports, there is a broad consensus in the Council on the need to bring down the tax rate on health and life insurance. The decision has, however, been deferred and will now be taken by a group of ministers. A report is expected to be submitted in October, and a closure is expected when the Council meets next in November. This is a welcome step. Union Minister Nitin Gadkari has said that the levy of 18% GST on insurance amounts to taxing the uncertainties of life. However, clarity on several critical issues is still awaited. The GST compensation cess was originally levied to compensate states for any loss in revenue measured against their guaranteed revenue. The cess was to be levied for a 5-year period ending in June 2022. It was then extended till March 2026 to repay the loans taken to compensate states for shortfalls in revenue during the COVID period. However, considering the current pace of collections, as per some estimates, the repayment of loans could occur even before the deadline. As the cess was levied for a specific purpose, the Council will now have to decide on whether the levy of the cess will continue, and if so, in what form, and how the proceeds will be shared. The newly formed group of ministers must work out a consensus on this issue. Then there is the issue of rate rationalization. While there is a view that no changes should be made in the existing tax structure, the current structure of multiple slabs along with the levy of compensation cess only adds to the complexities of the tax system and goes against ease of doing business in the country. The rate rationalization exercise should proceed, looking to not only bring down the number of tax slabs. One proposal has been to merge the 12 and 18% slabs, but also to review the items in each slab to address criticism regarding the oddities in the system. This exercise must also examine the issue of revenue neutrality. The group of ministers on rate rationalization is slated to meet next in September. After the difficulties during the transition to the new tax system, the GST architecture has stabilized. The tax base has the tax base has seen a steady expansion, revenues have been healthy, and leakages are being plugged. The GST Council now needs to bring about clarity on unresolved issues.